another portfolio update. For those of you that are new to the channel or haven't watched these types of videos, I basically go over all my different investment portfolios, give you guys an idea of what I've been doing, how they're performing, and what sort of changes I have made to them. So today we are going to go over my Acorns portfolio, see where it's sitting, and see what change I'm about to do. So I'll actually do the change while the video is playing. That way it's sort of real time. You guys get to see what I'm doing, see my thought process, and you can leave all the hate comments you want in the comment boxes below. But let's go ahead and pull up Acorns and take a look here. Good morning, Spence. Invest in your future. So right now the account value is $2,579.70. On my Acorns spend card, I still have a balance of 0. I don't plan on using that anytime soon unless they really come out with some great features. So right now I just have that tungsten card and I'm really just holding on to it. Our found money, that is slowly growing. So I actually found that Postmates does 6% back when you use Postmates, and that is one of the major food delivery services around here in southern Columbus. So as opposed to Uber Eats and Grubhub, we tend to use Postmates. So I've actually started doing that through the app. That way we can take advantage of that. I mean, if we're already being bad and we're already using Postmates, we might as well get the 6% back. So let's just look at our performance since the last video. Blah, 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 blah. All time. So let's take into account the subscription fee. So all time I've had almost a $100 gain. Really close there. That's about a 3.44% gain there within this year. Or at least all time, I should say. Let's just take a look at the year. It's probably really similar. Okay, if we actually break it down to a year, which is really what I want to capture, we have had over $100, which is 4.5% gain, which is cool. 6 months, 228, which is a 9.68% gain. Let's break it down to 3 months, 3.12. So we have had some rocky months here recently. You guys know that, you've noticed it. So that's why this isn't as spectacular. 1 month, this might even be negative, I'm not sure. Oh no, 4% in the last month. And then let's just look at today. I think it's a down day. Yeah, we're down a little bit today, but that's all right. So let's just see past what we're looking at here. Core account. Come on. All right. So we had a little bit of some of these deposits fall in today. So $8.50 from roundups, $5, $5. A lot of these were queued up and they all fell in today. They sort of accumulated over the weekend. So dividends, a little over $25. Referrals, a little over $25. Found money, a little over $30. This withdrawal was way back a few years ago when I started using Acorns. I don't really count this. I wish I could start a blank slate, but that's all right. I did have some dividends fall in recently. VWO, that ticker within my portfolio, paid $1.63 this quarter, and then VEA paid $5.26 this quarter, which is nice, but leads me to the main point of today's video. So as you know, I am in the aggressive portfolio in Acorns. Everyone says, you know, Acorns is already a pretty conservative portfolio. Even on aggressive, like it's not risky at all. So with that being said, these large company stocks and whatnot, these tickers, like VOO and which other one is it? I don't know, just a few of these tickers don't really pay that well dividends each quarter. So all 5 of these are quarterly payers. For me, being a dividend investor, I really like to see monthly payers, I should say. So that is what I am going to do today. I actually broke it down. You make more off dividends in the conservative portfolio a year than you would in the aggressive portfolio. I think it's like like a 12% difference. So I know that's probably crazy. You're like, wow, you're gonna miss out on gains. You're gonna really shoot yourself in the foot there. You're not getting that advantage. You're young. You should be aggressive. But I am all about passive income and cash flow, and reinvesting that for that compound effect. So, I'm gonna ship it. I'm gonna switch my portfolio to conservative. I'm gonna eat all those taxes right here on my gains. I'm just gonna go for it because it's my portfolio. Pretty much everyone that does Acorns has aggressive, so they all perform the same. You don't really see much difference between these different portfolio videos that other people are doing. So why not switch it to conservative? Not a lot of people do it. Not a lot of people know how it performs. They don't watch the dividend payouts. So I'm gonna be different. I'm gonna really I'm gonna do it. So let's actually take a look. So here you can see how the conservative portfolio is broken up. So what Acorns would do when I change this, they're gonna sell all the holdings I have right now, and they're basically gonna have that cash, and then the next trading window, they're gonna buy it in this allocation instead. Now, I wish what they would do is just sell off what they need to reach these this allocation, but I'm pretty sure from what I've been asking, they basically sell everything off in a lump sum and then reinvest. So the two monthly payers that we will be getting, iShares, this one right here, EQ or LQD. That is one of the corporate bonds. This ticker, it pays monthly. You can see some of the holdings within it. So, I mean, you get decent exposure. Visa, Apple, Google, Amazon, JP Morgan, Home Depot. They're within this. Then we have this iShares 1 to 3 year Treasury bond, which it's just Treasury notes here, SHY. Pretty well-known ticker. So that'll be in the fund as well. You would still get some exposure to VOO, VB, and I believe this is VEA, which I already liked. The dividend on VEA is pretty nice, so I'm glad I got to keep that. So really, this conservative portfolio it matches me a little bit more. Just my personality, my style of investing. I want to bring up my portfolio's overall yield, my annual yield. So switching to this will increase that. Will I see as much capital appreciation? No, not at all. I'm definitely going to lose out on that. But because I'm so long-term and I love seeing the cash flow and the passive income, I personally am going to be more satisfied seeing this each month or each day. So I think I'm going to go ahead and ship it. You guys are watching this. So change portfolio. Update investor portfolio. We want to be sure you have the best portfolio for your goals. If you don't think our recommendation is right, please update your investor profile. I don't need to update my profile. I just want to change the portfolio. All right, heads up. Are you sure you want to change their portfolio? To make this change, you need to sell your shares and buy new shares, so there may be tax implications. That's fine. A lot of you know I don't mind paying taxes or getting taxed on my capital gains. I know there's ways to be more tax advantaged, and there's different accounts for that, like IRAs and 401ks, which I am already taking advantage of those. These portfolios are just my personal investments. So if I'll get taxed, then I'll get taxed. Hopefully taxes are going to something useful. I know that's wishful thinking, but I don't mind paying it. It's a necessary evil. All right, change. Woohoo! You've successfully changed portfolio from aggressive to conservative. So, I'm going to guess that they'll probably sell and buy during tomorrow's trade window. So I'll be watching that and keep you guys updated. You'll probably see it on my Instagram and whatnot. But for now, I just wanted to show you guys that I was making the big switch, and I wanted to show you basically where my portfolio was sitting. Let's actually take a look. Maybe it's doing something. No, nothing here in the activity, but that's okay. It'll take a while to catch up, I'm sure. So there, big change from aggressive to conservative with this account. So we'll see how it goes. We'll see what happens, and I'll keep you guys updated. So If you like that video, go ahead, leave a comment, like the video. If you haven't already, go ahead and subscribe to the channel for more content like this, and I will catch you guys in the next one. Thanks.